Ccma. Welcome back to my channel. Students, today in this video I am going to explain you the subject cost control and management accounting. Because from my subscribers I get the request, they need the explanation for the unit 3 and unit 4 because tomorrow they have the exam. So this video is specially for my subscribers. So in this video I am going to explain you the unit 3. Students, under unit 3 you have two chapters, budget and budgetary control, and another chapter is standard costing and variance analysis. So in this video I am explaining you the questions from the chapter standard costing and variance analysis. So students, the questions which I am going to explain you today is very important from your examination point of view. Now under standard costing and variance analysis, we have material variances, we have labor variances, we have fixed overhead variances. So under that today I am explaining material variances. But before that you should know what is standard costing, what is standard cost. So standard costing is one of the technique of finding the standard cost, and standard cost is the cost which we calculate in advance, or we can say it is a predetermined cost. So standard cost is a predetermined cost, the cost which we calculate in advance. So standard costing is the technique of finding the standard cost. So standard cost, actual cost, and standard price and actual price. These four are the important components for calculating the material variances. Now, under material variances we have five types of variances. First is material cost variance, material price variance, material usage variance, material mix variance, and material yield variance. And the formulas are for material cost variance. The formula is standard cost into standard price. SQ is the standard quantity, SP is the standard price. MCV, material cost variance. The formula is SQ into SP minus AQ into AP. MPV, material price variance. Formula is AQ bracket SP minus AP. Material usage variance, MUV. MUV is also known as MQV, material quantity variance. For that formula is SP bracket SQ minus AQ. Whereas SQ is the standard quantity, SP is the standard price, AQ is the actual quantity, and AP is the standard price. Students, if in the question the four values are given, then it will be very easy for you to calculate the variances because the chapter is completely based on formulas. Now let's see the questions. The first question is, the standard and actual requirement of material A are as under that standard 10,000 units at the rate of rupees 4 per unit, and actual is 13,000 units at the rate of 3.8 per unit. Calculate the material cost variance. So in this question he is asking you to calculate the material cost variance. Students, this question is important for short for 5 marks. It's very important. See, in the question standard 10,000 units at the rate of 4 per unit. This 10,000 is your standard quantity and this rupees 4 per unit is your standard price. Actual 13,000 units. This at 13,000 is the actual quantity, and rupees 3.8 per unit, this 3.80 per unit is the actual price, that is AP. All the information is given, simply you have to substitute in the formula. Formula for calculating MCV is SQ into SP minus AQ into AP. Now the formula MCV, SQ into SP minus AQ into AP. In this question standard quantity 10,000 units are given and standard price 4 rupees is given. 10,000 into 4, 40,000 Actual quantity 13,000 units. 13,000 actual price 3.8. 13,000 into 3.8, 49,400. The standard cost is 40,000 and the actual cost is 49,400. So 40,000 minus 49,400, the difference is 9,400. This 9,400 difference is called variance. And this variance may be favorable or this variance may be adverse. So here standard cost is 40,000 and actual cost is 49,400. So student, the rule is simple. If actual is more, the difference is called adverse. The difference is not favorable for us. So whenever actual is more, the difference is called adverse. So this 9,400 is the adverse variance. So this is the question, and this question is very important for short for 5 marks. Material cost variance 9,400 adverse because actual cost is more, standard cost is less. Whenever actual is more, the deviation is called adverse deviation, adverse variance. Now the next question, this question is important for long 12 marks. The question is, from the following information calculate material cost variance, material usage variance, material price variance separately for X and Y. And information is given: material X, Y, standard quantity 10, 15, 25, standard price 4, 5, actual quantity 12, 18, then 30, actual price 3.75, 4.5. And here he is asking you to calculate the 3 variances: material cost variance, material usage variance and material price variance separately for material X and material Y. And all the information is given, standard quantity is given, standard price is given, actual quantity is also given, actual price is also given. Simply you have to substitute in the formulas. Now, in this question, standard quantity for X is 10 and for Y is 15, and this 10 plus 15 total 25 is given. So this 25 is a total quantity, and actual quantity for X 12 and actual quantity for Y is 18, the total is 30. So he is asking you to calculate separately for material X and for material Y. So no need to consider this total standard quantity and total actual quantity. We have to take separate standard quantity for X and for Y, and separate actual quantity for X and Y. Now, first is asking you to calculate material cost variance. So formula of material cost variance, MCV. MCV is equal to SQ into SP minus AQ into AP. First we are calculating for material X. For material X, the standard quantity is 10 and standard price is 4. 10 into 4. And actual quantity for X is 12 and actual price is 3.75. So SQ into SP, 10 into 4, 40. 12 into 3.75, 45. So standard cost is 40, actual cost is 45. Now here actual cost is 45. The difference is 40 minus 45, 5. Here actual cost is more. So this deviation is called adverse deviation. This is not favorable. So this is 5 adverse or unfavorable. Now for Y, formula is same, SQ into SP, AQ into AP. For standard quantity for Y is 15 and standard price is 5. Actual quantity is 18, actual price is 4.5. So 15 into 5, 75. 18 into 4.5, 81. 75 minus 81, 6. Again here standard cost is 75 and actual cost is 81. Here actual cost is more. So whenever actual is more, the difference is called adverse. So 6 is adverse. For X, 5 adverse. For Y, 6 adverse. Now, next is asking you to calculate material usage variance. But before that, we calculate material price variance. For material price variance, the formula is AQ bracket SP minus AP. In bracket, we have to write the prices SP minus AP because we are calculating material price variance. So, separately MPV for X and Y. For X, actual quantity is 12, standard price is 4, actual price is 3.75. Actual quantity 12, standard price 4, actual price 3.75. So 12, 4 minus 3.75, 0.25. So 12 into 0.25, answer is 3. Here we are calculating MPV, material price variance. So we have to see the prices. Here standard price is 4, actual price is 3.75. Actual price is less and standard price is more. So whenever actual is less, the difference is called favorable. So this 3 is the favorable because actual price is less. Now for Y, actual quantity is 18, standard price is 5, actual price is 4.5. So 18, 5 minus 4.5, 0.5, 18 into 0.5, 9 is the answer. Here for Y, the standard price is 5 and the actual price is 4.5 and we are calculating material price variance. So again the actual price is less. So answer is favorable. Answer is favorable because actual price is less. Now next is material usage variance. Material usage variance is also known as material quantity variance. For that formula is standard price bracket standard quantity minus actual quantity. SP bracket SQ minus AQ. Now for material X, standard price is 4, standard quantity is 10, actual quantity is 12. 4, 10 minus 12. 10 minus 12, 2. 4 into 2, 8. Here we are calculating material usage variance. Material usage variance or material quantity variance. So here we have to consider the quantity. The standard quantity is 10 and actual quantity is 12. Here actual quantity is more. So this 8 is adverse because actual is more. Now for material Y, standard price is 5, standard quantity is 15, actual quantity is 18. So 5, 15 minus 18, 3. 5 into 3, 15. Again actual quantity is more. So this 15 is also adverse. For material X, 8 adverse. For material Y, 15 adverse. And we calculate material cost variance, material price variance and material usage variance. So students, whenever we calculate these 3 variances, we have to do the verification. The verification is MCV is equal to MPV plus MUV. Separately for X and Y. For material X, the MCV is 5 adverse and material price variance for A is 3 favorable and material usage variance for X is 8 adverse. 5 adverse is equal to 3 favorable plus 8 adverse. Here MPV is 3 favorable and MUV is 8 adverse. So one is favorable, the other is adverse. So from the adverse we have to subtract this favorable because adverse is more. 8 minus 3, we get 5 adverse. This is the verification. MCV is equal to 5 adverse and MPV plus MUV again 5 adverse. Now for material Y, the MCV is 6 adverse and MPV is 9 favorable and MUV is 15 adverse. So 6 adverse is equal to 15 adverse, 9 favorable. 15 minus 9 again 6 adverse. So this is the verification. So students, these 2 questions are very important from your examination point of view. And in my next video, I will explain you the Unit 4 Fund Flow Statement. So students, stay connected with us, and if you like the video, then give a like. And if you are new to my channel and if you not subscribe my channel, please subscribe the channel so that future notifications related to my future videos will come to you directly. And students, on my YouTube channel, the important theory questions of cost control and management accounting is available. So please visit there, see the videos, like the videos and share the videos with all your friends so that you and your friends both will be benefited from the videos. Thanks for watching the video. All the best for your examination and stay connected with us.